Hello everyone, welcome back to Stock Market Meridian. Today the market looked weak for almost the entire trading session, but just 15 minutes before the closing bell, the bulls made a powerful comeback. Is this the beginning of another rally or just a temporary pullback before the next move? And that's not all. Vedanta announced another demerger. Ather Energy received massive target price upgrades from global brokerages. RBI took a major step towards UPI transaction charges. And several important corporate updates could impact the markets in the coming days. So make sure you watch this video till the end. Today is 4th August 2026 and you're watching today's post-market report. Let's begin with today's market action. Today the markets once again opened in the positive zone. However, throughout most of the trading session, the indices remained under pressure. Interestingly, in the final 15 minutes before market close, we witnessed a strong bullish candle indicating aggressive buying at lower levels. Looking at the sectoral performance, media and metal sectors emerged as the top gainers, while realty and oil and gas sectors ended as the top losers. Now let's move on to today's biggest market moving news. Vedanta Limited will remain in sharp focus over the coming days. Following its major 5-way corporate demerger earlier this year, the Anil Agarwal-led group has now announced another restructuring by demerging its real estate business into a separate listed company called Vedanta Property Platforms Limited. The board has approved a scheme of arrangement under which eligible shareholders will receive one fully paid equity share of Vedanta Property Platforms for every 20 shares held in Vedanta Limited. The new company is proposed to be listed on both the NSE and BSE, while the record date will be announced later. This move transfers nearly 2,200 acres of industrial and land assets along with around 55,000 square feet of residential and commercial properties into a dedicated platform focused on asset monetization. Although the real estate business contributed only around 1.26 crores of turnover in FY26, the objective is to unlock hidden value from surplus land assets. Overall, this 1:20 real estate demerger is another major value unlocking step in Vedanta's long-term restructuring strategy. Next, Ather Energy was one of today's biggest highlights and could remain in focus for the next few trading sessions. The company reported an excellent Q1 FY27 performance. Revenue nearly doubled, rising 89% year-on-year to 1,217 crores, while net loss sharply reduced from 178 crores to just 51 crores. Most importantly, EBITDA turned positive at 9 crores, marking a significant operational milestone. Following these strong results, leading global brokerages remained highly bullish. Nomura maintained its buy rating and increased the target price to 1,714 rupees, implying nearly 35% upside. CLSA maintained an outperform rating with a 1,600 rupee target. MK also raised its target to 1,600 rupees. HSBC maintained a buy rating with a target price of 1,450 rupees. With almost 100% capacity utilization, Factory 3.0 expansion and multiple new product launches ahead, investors continue to remain optimistic about Ather's long-term EV growth story. Next, the Finance Ministry has introduced a bill to amend the Payment and Settlement Systems Act 2007, paving the way for future implementation of Merchant Discount Rate or MDR on selected digital payment modes, including UPI. Now let me briefly explain MDR. Merchant Discount Rate is the transaction processing fee paid by merchants to banks and payment service providers for handling digital payments. Importantly, this bill does not impose any charges immediately. Instead, it simply gives the government the authority to decide in the future which digital payment modes will attract MDR and which will remain exempt. As per reports, the government may consider applying MDR only to large merchants for transactions above 2,000 rupees, while small merchants and normal consumer transactions are expected to remain unaffected. Next, Sony Corporation is also making headlines today. Instead of joining the aggressive price war started by South Korean and Chinese television manufacturers, Sony has decided to focus entirely on premium technology and brand value. The company believes India will become its largest Bravia television market globally within the next 5 to 10 years, even surpassing the United States. Sony plans to strengthen its presence in the 48,000 to 1.4 lakh premium television segment, supported by local manufacturing under the Make in India initiative. The company is also expanding experiential retail stores where customers can directly experience Sony's picture and sound quality. Since Sony competes directly with LG Electronics in the premium segment, this development could have an impact on LG's business in the coming quarters. Next, DLF reported its Q1 FY27 results while reaffirming a massive long-term expansion plan. The company is preparing residential launches worth over rupees 60,000 crore rupees, while its total development pipeline now stands at approximately rupees 1.15 lakh crore rupees.
Although quarterly sales bookings remained subdued because of regulatory approval delays, cash generation remained extremely strong. Net profit increased 4% year-on-year to rupees 794 crore rupees, while operating cash flow stood at rupees 1317 crore rupees. DLF also ended the quarter with an impressive net cash surplus of rupees 15,200 crore rupees, keeping its balance sheet extremely strong. Next, another important regulatory update came from Delhivery. The RBI has officially granted a Type 2 NBFC/ND license to its wholly owned subsidiary Delhivery Financial Services Private Limited. This allows the company to provide credit and financial services directly to fleet owners, vendors, and delivery partners across its logistics ecosystem.
This marks an important step towards building Delhivery's financial services business. HAL continues to maintain a strong long-term outlook. The company currently has an order book worth 2.54 lakh crores, providing revenue visibility for nearly 7 to 8 years. Major defense orders include 97 LCA Mk1A fighter aircraft, ALH helicopters, and Dornier aircraft, while exports continue expanding across multiple international markets. Management remains highly confident about steady growth during FY27 and beyond. Next, the Ministry of Ports, Shipping and Waterways has set an ambitious 55,000 crore rupee asset monetization target for FY27 under the National Monetisation Pipeline 2.0. The government plans to monetize ports and maritime infrastructure through PPP models and long-term leasing. Listed companies such as Shipping Corporation of India and Cochin Shipyard could remain in focus as this initiative progresses. Next, Amber Enterprises officially reported a fire incident at its Noida manufacturing facility. Sadly, 2 firefighters lost their lives while controlling the fire. The company confirmed that the affected assets are adequately insured and insurance claim procedures have already begun. Operations in unaffected areas are expected to resume normally as soon as possible. Next, today, 2 major block deals also grabbed investors' attention. First, Peak X5 Partners and Elevation Capital are selling around 2.3% stake in Meesho, aiming to raise nearly 1900 crore rupees. Secondly, early investor Safe Partners is selling approximately 2.3% stake in Paytm, with the transaction valued at nearly 2,200 crore rupees. Both transactions are being offered at nearly 5% discount to the current market price. Another important update is regarding FCNR-B deposits, which have become one of the biggest banking stories recently. According to the latest government data, the top 4 PSU banks have now overtaken leading private banks in mobilizing FCNR-B deposits. State Bank of India, Bank of Baroda, Canara Bank, and Punjab National Bank together now hold nearly $21 billion compared to around $18.5 billion held by the top 4 private banks. Overall, FCNR-B deposits across the banking system have almost doubled to $60.55 billion after RBI introduced its special forex swap window. This clearly shows that RBI's policy has successfully attracted significant foreign currency inflows into the Indian banking system. What do you think about this development? Let me know your opinion in the comment section below. Now let's quickly look at today's important quarterly results. First, Pidilite Industries. Almost all earnings parameters improved strongly on both a yearly and quarterly basis. Overall, the results were excellent. Next, Graphite India. Revenue improved on both yearly and quarterly basis. Although profitability declined sequentially due to seasonal factors, overall, the results remained good. Next, Godrej Properties. Except for yearly revenue growth, most earnings parameters showed weak business momentum. Overall, the results were weak. Next, Emami Limited. Revenue and EBITDA improved strongly. However, net profit declined on both yearly and quarterly basis, while margins remained mixed. Overall, the results indicate some weakness. Next, VRL Logistics. Revenue, EBITDA, net profit and margins all improved strongly on both yearly and quarterly basis. Overall, the results were very strong. Next, Zydus Wellness. Revenue and EBITDA improved on yearly basis, but declined sequentially. Net profit and margins also witnessed significant decline. Overall, the results were weak. That's all for today's post-market report. If you found this video informative, don't forget to like, share and subscribe to Stock Market Meridian and press the bell icon so you never miss our daily market updates. I'll see you again tomorrow morning with another detailed pre-market report before the market opens. Until then, thank you for watching. Signing off, Jai Hind.